So you got a letter from your insurance company saying they're not renewing your policy or they need a roof inspection before they'll continue coverage. And you're looking at your roof thinking, what are they even talking about? It's not leaking, there's nothing wrong with it. I get it, this feels completely arbitrary, and honestly, it's one of the most frustrating things happening in homeowners insurance right now. Now, we have already talked about roof age, claims, and non-renewals before in another video, but I wanted to focus on this specific question because it's the one we hear most often. My roof doesn't leak, so why do I need a new roof? Let me walk you through what's actually going on, because once you understand what they're seeing, it makes a lot more sense, even if you still don't like it. Here's the thing, your carrier isn't waiting for your roof to leak. They're looking at whether your roof is going to fail in the next couple of years, because by the time it's leaking, the damage is already done. And they're not just guessing. They're looking at specific things you might not notice from the ground. What they see is puddling marks, even if your roof isn't leaking right now. If there are visible water marks or discoloration from where water sits after it rains, that's a red flag. It means water isn't draining the way it should, and that's a ticking clock. If you've got asphalt shingles and they're losing their protective coating, the shingles are breaking down. That might not cause a leak today, but it will soon. Curling or lifting shingles, again, not leaking yet, but it's coming. A 15-year-old roof in Arizona has a very different risk profile than a 15-year-old roof in Utah. Carriers know this, and they're factoring it in. And here's the part that surprises people. A lot of this is being caught through satellite imagery. They're literally looking at your roof from space and running algorithms to detect patterns you can't see standing in your driveway. So why are they being so aggressive about this? It comes down to what they're actually on the hook for. When your roof fails, they're not just paying to replace your roof. They're paying for everything that happens because your roof failed. There's water damage to your interior, drywall, flooring, insulation, electrical work, mold remediation if it sits for a while, structural repairs if it gets bad enough, temporary housing if you can't live there during repairs. And if your roof failure causes damage to a neighbor's property, they're paying for that too. We've seen this happen with clients at our agency. Small leak starts in the corner of a bedroom. Homeowner doesn't notice for 2 weeks because it's only dripping into the attic. By the time they see the ceiling stain, there's already mold in the insulation. The drywall in 2 rooms needs replacing, and the electrical in that wall has to be redone. It started as a $300 shingle repair, but turned into a $45,000 claim. A simple roof replacement might cost $15,000. The claim that comes from a failed roof can easily hit $80,000 or more. So from their perspective, they'd much rather non-renew you now than write a check in 18 months. I'm not saying that's fair to you, I'm saying that's the math they're actually doing. You might be thinking, my roof has looked like this for a few years. Why is this suddenly a problem? Over the last 3 to 4 years especially, a few things have changed in the industry. Reinsurance costs have gone up significantly, which means carriers are paying more for their own coverage. Climate-related losses are hitting harder and more frequently, and the market has gotten competitive enough that carriers would rather drop risky policies than keep them and hope for the best. They've also gotten way more sophisticated with how they assess risk. Desktop reviews using satellite imagery, public records, and even street view data. Drive-by inspections where they don't even knock on your door. Formal roof inspections if something flags in their system. This isn't personal, it's not even about your specific roof all the time. It's about what their data says happens to roofs that look like yours. Okay, so what are your options here? And look, I know this situation is stressful. You've been paying your premiums on time, your roof isn't leaking, and now you're being told it's a problem. That's frustrating and I get it. First, know your timeline. If you got a letter with a deadline, that's real. Mark it on your calendar and work backward from there. Second, if they're asking for an inspection, get your own first so you know what you're dealing with. I'll be honest, most of the time an inspection isn't going to change their mind, but at least you know exactly what the issues are before you make any decisions. Third, start shopping immediately. Don't wait to see if they'll change their mind, and don't wait until the last minute. The closer you get to that deadline, the fewer options you'll have and the more you'll pay. Understand the difference between actual cash value and replacement cost coverage on your roof. ACV depreciates based on age, which means less money if you file a claim. Replacement cost is better but harder to get on older roofs. Know which one you have before you shop. And once you've been maintaining your roof, cleaning gutters, replacing damaged shingles, resealing flashing, document it. It won't always matter, but it's worth having that record. Now here's the part I wish I didn't have to say, but you need to hear it. Carriers would rather non-renew than pay the claim. They've done the math, you disagree with the timeline, they control the policy. They've run the numbers. They've looked at thousands of roofs like yours, and they know what percentage of them are going to fail in the next 24 months. You might think your roof has another 5 years in it, and you might be right, but they're making a business decision based on probability, not on your specific situation. And the hard reality is they control the policy. You can disagree with their assessment, you can think it's unfair, but if they decide not to renew, that's their call. So where does that leave you? If your roof is flagged, you've got a decision to make. You can replace it now and keep your coverage options open. You can shop around and see what other carriers will offer, but expect to pay more and possibly get less coverage. Or you can try to find a carrier that will take your roof as is, but those options are shrinking. None of those options are great, and I'm not going to pretend otherwise. But the worst thing you can do is nothing, because if you let the clock run out, you're going to end up scrambling to find coverage at the last minute, and that's when you get stuck with expensive, limited options. The reality is, homeowners insurance has changed. Carriers are being more selective, and roofs are one of the biggest factors in that decision. It's not about whether your roof is leaking today. It's about whether they think it's going to cost them money tomorrow. I know that's frustrating, but at least you know what they're looking at and why now. And if you're dealing with this right now and need help figuring out your next move, reach out. That's what we're here for. I make videos breaking down insurance in plain language, so if this helped, hit like or subscribe to catch future ones. Thanks for watching.